7 reasons why I think most institutional investors will keep staying away from Bitcoin. This is different to what most people are saying when they're saying that institutional investors are already coming in. I think they're gonna keep staying away. 7 reasons, and I tell you one thing, reason number 7 is gonna shock you. So let's take a look. Hey and welcome to today's video. My name is Julian. On my channel, it's all about different topics on investing. Mostly we discuss cryptocurrencies and Bitcoin, but we also talk other things, blockchain, various altcoins. I mean, it's all about making you #cryptofit fit for this world of decentralization. We discuss stocks, we discuss precious metals, all kinds of things. And today I want to talk about a topic that I think many people, especially in the crypto world, see differently. They want to see it differently. And I want to debunk this a bit because I see this obviously the opposite way. And it's about institutional investors. We hear so many times how institutional investors are coming in and more institutional investors will come in and they will drive the next wave. And I'm actually a bit skeptical, and I'm so skeptical that I actually think that it's way more likely that very few institutional investors are coming in rather than there are. Especially the last reason, maybe the last 2 reasons. So that's going to be quite interesting. Before we talk about this, I quickly want to give a pitch on my own company called Cake. We provide cash flow on your cryptocurrencies. So if you like lending cryptocurrencies, staking cryptocurrencies, if you own Bitcoin, Ether, if you own many of the staking coins, you want to check out Cake. We're the only company that's completely transparent in the crypto ecosystem. You can track everything. I mean, it's all about trusting, but verifying. And so we do this. Let me pitch. Here the link, pool.cakedefi.com, sign up, try it out. Would love to welcome you as one of our users. But now let's dive in. Let's talk about 7 reasons why I think institutional investors will actually keep staying away. Reason number 1, and it's still a reason, is actually institutional investors or investors in general understanding Bitcoin. Understanding that Bitcoin is scarce. Understanding what digital scarcity actually means. Understanding how Bitcoin is actually non-correlated compared to many other investments. And I really think that many institutional investors will struggle with this, especially the older generations. And we see this. We see many of the older investors who really struggle. The statistics are clear. Generally speaking, if you are below 35, it's way more likely that you see Bitcoin as a reasonable investment. And if you're above 35, you rather see it not as a reasonable investment. So that's obviously how it all starts, with understanding. Now, one fair point here is I think more and more institutional investors will start to understand. So reason number 1 is probably here today, but this reason is going to disappear over time. Fair enough, right? But I still think that's actually a reason. Reason number 2 is rules that the institutions actually have, right? So all those funds actually have rules. What can they invest into? What can they not invest into? Now, Bitcoin is something so unique, it's something so new that it's very difficult in this rules system that a fund is actually allowed to invest into something like a digital scarce good like Bitcoin. Stocks is very straightforward, bonds very straightforward, precious metals, real estate. I mean, these are all things, commodities, these are all things that have been around for decades and some even centuries, right? And so it's quite straightforward to have rules for this. And here, the rules are just quite new. And so obviously, again, I think rule number 2, this kind of obstacle number 2 is gonna dissipate over time as well. But right now, it's still there. And I agree, rule number 1, rule number 2 will dissipate. So it's probably not gonna be the biggest obstacles, but they are still there. Reason number 3 is actual uncertainty of regulation or regulation in general. So by the government, by the regulator, either a missing regulation or actual regulation where, well, funds are not really sure what to do, or they're actually not allowed to invest in it as a rule. And again, This is something that many people kind of point out today. The media likes to point this out today. I want to be upfront. I think over the next years, this is probably going to get clearer. It's going to get easier. To me, this falls with number 1, number 2, number 3. It's probably going to dissipate. So these are reasons for right now, but it's probably not going to be the reason why ongoing you're going to struggle onboarding institutional investors. So let's go on number 4. And number 4 has been one that many people, many kind of newspapers or media love to talk about. But to be fair, it's probably going to get more and more irrelevant. And that's the Onramp, a missing Onramp. For many institutions, it's been actually difficult. It's been struggling in getting institutional investors, actually onboarding them into the crypto ecosystem. It started with, well, funds in general. How can funds get accounts? How can they have access? But I mean, we have BEC today, we have the CME today, Chicago Mercantile Exchange, we have more and more futures. I mean, we saw with Paul Tudor Jones coming in that, well, this was not really a problem, and it's very unlikely he actually bought Bitcoin natively. He probably bought Bitcoin futures, right? So this is not a real reason anymore, to be honest. I think this is many times kind of chunked around. Again, it might fall under the missing information link. Let's get to reason number 5. And reason number 5 is a lack of volume or lack of liquidity. Now, many times institutional investors, they are not buying hundreds of thousands of dollars, millions of dollars. They're probably going to buy billions of dollars to diversify their entire portfolio into the crypto ecosystem. And obviously, it might still be a bit of a challenge sometimes to kind of have enough liquidity and have enough volume to make sure that these institutional investors can actually invest enough into the crypto system. But again, I think first of all, this is probably not as much of a problem anymore. And going forward, this is probably not going to be the main reason that people can or have to stay out, because there will be enough ways. There will be on-ramps, there will be different vehicles to go in, be it options, be it futures, be it enough liquidity on exchanges in the spot markets themselves. So we have 5 reasons, and you're going to listen to those and you're like, Julian, I mean, are you clickbaiting me? I mean, you've been saying probably on the future, there's institutional investors aren't coming in. And so far you've been all talking about reasons that are going to go away. Yep. And I'm going to give you 2 that I think will not go away. Actually, on the contrary, they will get worse. And they are the reasons that no one talks about. These are the reasons that everyone talks about, in my opinion, and that's the reason why everyone has a wrong opinion. So let me give you the 2 reasons, and especially the last one, that's going to shock you, but the other one is also key. Why institutional investors are probably not going to come in at the speed that people expect or ever. And reason number 6 is the lack of an advantage of the institutional investor. The lack of an advantage. Institutional investors want to have an edge over the retail investor. They either want to have an informational edge, they want to have an edge in, well, having access, getting a better price. They want to have an edge in being able to kind of control where the direction of the company or the institution. Institutional investors need to have an edge. And in Bitcoin, they don't. That's what makes Bitcoin so fantastic, because it is what is basically the dream of every investor. Suddenly it leveled the playing field. But obviously at the same time, that's the major hurdle for an institutional investor. If you look at a Warren Buffett loves to invest in companies where he has an edge, where he can use his government relations, where he knows the managers. And suddenly there's this decentralized system where you can't talk to anyone, where you're not really sure who is in charge, and suddenly you don't have an edge anymore. But at the end, most of those institutional investors, they want to have an edge. Now here's the trick. That's going to get worse and worse and worse and worse. Because you could say right now as a whale, you still have an edge because you can manipulate the market. But over time, this is going to get worse and worse and worse. Right now, we're talking about hundreds of billions. But what if we talk about trillions of market cap? Well, suddenly with trillions of market cap, well, coming in with a couple $1 billion, you're not even moving the market anymore. So this is gonna get worse and worse and worse. And you look at any institutional investor, they wanna have an edge. You can look at, for example, Bill Ackman. Bill Ackman, you check it out yourself. Mid-March, he makes this massive long position. And then what does he do? He goes on media, he goes on television, and he starts marketing that long position. He talks about how the government needs to take massive action, how stuff has to move. And what happens? Well, of course, he starts manipulating everything. He has an edge. And he makes a super, super strong return in those weeks after mid-March. Now, you can blame him for this, and that's all fine. But at the end, this is what institutional investors have been doing for the last decades, and that's what they want to do for the next couple of decades. That's what makes Bitcoin so fantastic, because it doesn't allow anyone to do this anymore. But at the same time, that's the setback. That's the downside of not being able to onboard institutional investors. Because there is no insight, there is no better deal. Everyone has the same thing. It leveled the playing field. And that's just gonna get worse. But that's not even as crazy as number 7, so stay tuned. Number 7 is one of the main reasons why I think, again, it's gonna get worse and worse and worse. And you know what it is? Many people think way too complicated. It's ego. It's reputation. Institutional investors don't want to get into Bitcoin because they don't want to have the feeling that they kind of bought the bag of someone else who offloaded it to them. They didn't get into Bitcoin when Bitcoin was $1. They got in when Bitcoin was 10,000 or when it was 20,000. It's their ego. They don't want to admit that they were later than someone else. They don't want to have for years they were against Bitcoin. They don't want to having to change their opinion. They don't want to admit that over the past 8 or 9 years since they know about Bitcoin, they were wrong. It's as human and as basic as it gets. And you see this in so many things. In so many things, human beings and people in institutions are the same as any other human being. You want to stay congruent with your past decisions, and you don't want to explain to someone to say, hey, you know what? Actually, sorry, I know you've been telling me since 2011 that Bitcoin was $1 and my fund should get into Bitcoin, but we never did. But now when it's $10,000, we're getting into Bitcoin. They don't want to admit that. They don't want to buy the bag of someone else. It's ego, my friends. And many, many, many people, actually majority of people, prefer to die with their ego high rather than to live with their ego down. It's all through history. And it's the downfall of every individual. It's the ego that's actually superseding good decisions. Many, many times emotions are the main driver, and emotions are really bad advisors. And I tell you, if you don't believe me, I know many institutional clients, I know many institutional funds, I know very wealthy investors. Whenever I talk to them, this is what's shimmering through. It's the shimmering through when they're like, okay, so where's Bitcoin right now? And I'm like, hey, it's at 10,000 and it might go to 100,000. And they're like, oh really? Wow, so it could go 10x. And I say, yeah, it could. And they're like, so when did you buy? And I said, well, I bought my first Bitcoin at 400. And I immediately noticed how they're like, holy crap, so Julian is already up 25x. So if this thing goes to 100,000, man, he makes 250x. I only make a tenfold. And suddenly the entire excitement dissipates. And I'm telling you, this is such a massive hurdle, and it's gonna get worse. And what it's actually gonna take, it takes probably, and we have seen this over and over again, it's probably gonna take a new wave of funds. And we have crypto funds, right? We see it with Grayscale that's just buying up over 100% of all the new mined Bitcoin. We're gonna see this. We're gonna see the early investors. Jamas Palihapitiya, he has been investing in Bitcoin early stage. So these are the funds that are gonna overtake, and we have seen this over and over and over again. We have seen the algo funds overtake all the traditional value investors like Warren Buffett and Berkshire, and suddenly you had all these like Medallion and so on suddenly overtake them, and now there's a new wave coming in. So what I want to explain to you in those 7 reasons, and let me know in the comments below what you think about those 7 reasons. Maybe you disagree with one. Maybe you feel that one should be added. And again, I believe the very first 5 are not that relevant. It's probably the last 2 that are actually going to be super relevant. And let me know what you think about those. But I really want you to think about this and kind of consider waiting for those institutional clients. There will be some coming in, but I still think the majority is not going to come in because they don't want to admit that you were right. And then the great ones, that they were wrong. They prefer dying with their ego high rather than surviving with their ego low. Remember that. It's very human. It's very basic. And at the end, that's what drives most decisions. So that is my opinion. Let me know what you think about this. Let me know in the comments below if you are, if you want to be notified for more updates, for more of those great videos, then subscribe, like, stay tuned. And again, check out my company Cake. I'll post it up again once into the chat. I will look into the comments as well. So if you have any questions, let me know. And see you at the next video. Thank you so much. Julian, bye-bye.